Recently, I did a video on how to calculate your financial independence number. In the comments of that video, someone asked me if I had achieved my financial independence number already. And it was actually my daughter's boyfriend. So this video is in response to that. There are actually several ways for you to achieve financial independence. And in this video, I'm going to share with you 4 of the most common ways for you to achieve financial independence. I'll share which one I chose first, and then I'll share with you which one I'm going to build next. And make sure you watch to the end, where I'll be discussing 2 of the most common myths about passive income that I find and hear about on YouTube. I hope you'll get inspired to start or continue your road to financial independence. Your mindset changes everything. My name is Paris Clough, and this is Financial Self-Reliance. If you're new to the channel, we share the mindsets and the skill sets of the wealthy so that you can manage, protect, and grow your assets. If that sounds like the kind of channel you'd like to be involved with, go ahead and hit like and subscribe so that you don't miss any of the videos that I produce. As I shared with you earlier, I produced a video on how to calculate your financial independence number. The point of calculating your financial independence number is to determine the amount of money that you need to accumulate so that your investment returns pay all of your expenses for you. Let me put it this way. The point of financial independence is to build an asset that will pay your bills for you so that you don't have to, so that you have the time and freedom to do the things you really want to do. This is financial independence and financial freedom. This is also why there's such a push to lower your expenses as soon as possible, because the lower your expenses, the faster that you can replace those expenses with a passive income so that you can reach financial independence much sooner. While I totally agree that you should take control of your spending, I don't think you should contract so much that you forget the whole point of financial independence is actually to build wealth and to expand. And the only way to really do that is to build positive cash flow and lots of it. One thing is for sure, rich people didn't get rich by spending all their money, so you definitely need to get your spending under control. One of the things that you'll find as you get your time back and you have freedom to do things is that you'll actually be able to have enough time to dedicate to something that you're really passionate about, and you'll probably exponentially grow your income and your wealth from there. Personally, once I got to the point where I wasn't worried about money all the time, it surprised me how much money I was actually able to make. I make more money every year than I ever have before, because I actually have the time to dedicate to building my streams of income. So once you reach financial independence in one area and you put that on autopilot, now it's time for you to build financial independence again in one of the other areas that I'm about to share with you. In his book entitled Cash Flow Quadrant, Robert Kiyosaki talks about the 4 quadrants that build towards financial independence. The first of these quadrants is employee. The second is self-employed. The third is business owner. And finally, investor. On the employee and self-employed side of the quadrant, it's all transactional based. You're literally trading your time for money. You have to do the work to get paid. If you don't do the work, you don't get paid. That's an employee and self-employed situation. The goal of financial independence is to get over to the other side of the quadrant, into the business owner and investor side. A real business owner doesn't trade his time for money like employees and self-employed people do. Nor does an investor. A lot of people start out as an employee or a self-employed person and then build their way into a business and into an investor. They do this by having a side hustle or some kind of transactional business that they have to trade their time for money in the beginning until they build it to the point where it becomes passive. Let me share with you an example. A lawyer who's not suing somebody isn't going to be paid. A contractor who's not building something doesn't get paid. A doctor who's not seeing patients isn't getting paid. These professions are all actual self-employed professions. They're actually more self-employed than businesses, because if they don't work, if they don't do what they're supposed to do, they don't make money. Someone who actually makes the transition to business owner is somebody who's working on their business instead of in their business. Put another way, if you walked away from your business for say 30, 60, or 90 days, what would happen to that business? Would it continue to grow, or would it fall flat? If you walked away from your business for a period of time and it continued to produce income, you are actually a true business owner and headed towards financial independence, because that's a more passive income stream. If you still have to trade your time for dollars, if you walked away from your business and there was no money coming in, you might want to think about making the changes and moving towards a more passive business model. When you no longer have to trade your time for money, that's when you really obtain financial independence and financial freedom and become financially self-reliant and wealthy. Building a business is one of the most powerful ways to obtain financial independence, but it has to be the right kind of business. That has to be the kind of business that produces a passive income for you. Now, it could be a business that produces both passive and traditional transactional income, but make sure that you're building the passive income in that business so that you can eventually have that business run on its own. And you don't have to be there in order for it to make any money. This is the path that I chose to build my financial independence first. So in answer to the question, yes, I have achieved financial independence, but about 3 or 4 years ago, the passive income in my business got to the point where it completely covered all of my expenses, and it's only grown from there. So I promise it's worth it. Build a passive income stream and then go build some more. The next way to build financial independence is as an investor. As an investor, there are actually several ways for you to build financial independence. The more common way is the reason why someone would need to know their financial independence number, so that they know the dollar amount that they need to accumulate in a portfolio of funds like exchange-traded funds, mutual funds, or index funds. If you can build a portfolio large enough that the interest that you earn off that portfolio pays for your expenses, you've also attained financial independence. And that's the more common way that most people are talking about, and especially the more common way why you would need to know your financial independence number, because that's the dollar amount that you need to have in order for you to have enough interest to pay all your bills and your expenses. Now, technically, you could live forever if all you did was live off the interest that your portfolio was earning. Unfortunately, there are bad years and good years in the market, so some years may not produce an income. That's why the 4% rule is so important, because whether you have a good year or a bad year, studies have shown that if you take 4% out every year, you're going to be able to sustain that and probably into perpetuity, but the records show for at least a 30-year period. Now remember, the goal of financial independence is to develop an asset that will pay your expenses for you. So please hit the like and subscribe button if you're getting value out of this video so far. Another great way to hit financial independence in the market is through dividend-paying stocks. Now the power of dividend-paying stocks is that not only does the stock appreciate in value over time, but as you own a piece of that company, the profits of that company each year are paid to you in the form of a dividend for each share that you own. So if you had enough shares that were paying you a large enough dividend every month, you'd be able to have enough money to pay your expenses. That's another way for you to build financial independence, by having a dividend portfolio that pays your expenses for you through dividends. Another really neat thing about dividend paying stocks is that regardless of the price of the stock, the company still pays the same dividend. So if the price of the stock goes up or down, you're still going to have the same income coming in through the dividend, unless of course they cut the dividend a little bit and declare a smaller dividend. And finally, as an investor, the last route that I'll share with you on this video today is as a real estate investor. Now in real estate, you can either buy and flip properties and get large chunks of cash that you could then invest in the market, or you can develop a rental portfolio where you have a lot of rental properties and you collect rents, and the income from those rents begins to pay your expenses for you. That's another way for you to build financial independence as a real estate investor. Tell me in the comments which of these ways that you'd like to build your financial independence. Would you like to start with one and then build others later? Or are you working on a couple of them all at the same time? Leave a comment below, because I'd love to know what you're doing to achieve financial independence. Now I'd like to share with you a couple of myths about passive income. The first is that you don't do anything, you just sit around and collect checks and there's no work involved. That just isn't true. You have to maintain your passive income. There's still work to do. It's just a lot more rewarding to do that work, because the work that you're doing is to build your wealth, not to build the wealth of somebody that you're working for. But you still have to work to maintain your passive income. The second myth is that your passive income will always pay for your expenses. One of the things that you'll notice as you begin to have financial independence is that now that you have more time to do things, you want to spend more money when you do those things. And so your expenses actually increase. So you're actually going to need to take time to continue to build passive income streams, or continue to build the income streams that you already have into larger passive income streams, so that you can continue to cover your expenses as your expenses grow. And that's what I'm doing. I started a business many years ago that is currently paying me a very nice passive income. And now I want to start another business with my YouTube channel and my courses. I'm also going to be building a portfolio of funds and a portfolio of dividend paying stocks. And I have a goal to get my first rental property next year. I'm going to be sharing my journey with you as I build a few more income streams. So if you're interested in following that journey with me, go ahead and subscribe and put a comment below so that we can stay connected and keep each other motivated. I hope you got a lot of great information out of this video and that it inspires you to start or continue your journey towards financial independence. I hope you have a great day, and we'll see you on the next video.